Coal India belongs to the coal mining sector. It's actually a monopoly company having a more than 80% market share. Its focus continues to be on meeting the power sector's demand for coal, and it is making a current dispatch run rate of 1.95 metric tons per day, of which it is supplying 1.65 metric tons per day to the power sector, and the rest dispatches to the non-power sector. And it is looking to dispatch around 66-70 metric tons of coal in the financial year 2022. And in the e-auction sales, it expects around 90 metric tons of dispatch. Power demand outlook, which is quite favorable, and the 50% e-auction premium in the month of October indicates that the demand for coal is actually strong. If this demand sustains, then Coal India will actually ramp up the supply in the coming months. However, the diesel cost, which is rising, and the impending wage revision makes me believe that the Coal India will have to hike the FSA prices soon. And it has taken an ad hoc provision of 3 billion rupees in the quarter two of financial year 2022. However, the negotiations are still on, and hence the final actuarial evaluations and provisions are difficult to predict. Impact is expected to be much less versus the previous revisions, since this time the number of employees in consideration is lower by 75,000, and the DA increase is also lower this time. And the company has been able to reduce its receivables substantially to the sustainable levels of 12,000 crore currently. And I believe that H2 of financial year 2022 will see higher offtake and higher realization for both FSA and e-auctions. As I said before, Coal India is actually targeting around 670 metric tons of production dispatch in financial year 2022. And the dispatch target for financial year 2023 stands at around 710 metric tons. But it will depend on the end inventory of financial year 2022. So it is actually trading at the current price of 156. It is almost 50 rupees down from the 52-week high, and it trades at a PE of 6.97, which is very less, and its dividend yield is very high. Actually, it's almost 11%, and its ROE and ROC are more than 30%, which is good. And the price to book value is 2.38. The price to sales is actually 0.97. The price to book value is 2.38 because it actually gives out most of its earnings as dividend, due to which it retains less amount of cash. And the net profit margin last year was 14.1%, and the dividend payout is 77%. So it is giving almost 77% of its annual earnings as dividend, and reinvest the rest into the coal business mainly, and also other businesses. It's actually trying out some businesses which are from the renewable side and things like that. So it looks to be it's worth buying. However, this is my personal opinion. You do actually research, you do your own research, and or advice, consult your financial advisor, and consult your financial advisor before investing. So that's a disclaimer. If you like this video, do subscribe to it.